Well, obviously, the weak spending environment has continued. We saw it already in the second half of last year. It continued in the first quarter of this year. But the reason for certain optimism is that we had actually pretty good order intake development. It started already in Q4 last year, and now it continued in the first quarter this year, especially in our network infrastructure business.
Where are you seeing? I mean, network infrastructure, again, they saw 26% falls in local currencies in the latest figures as well. But why are we seeing something that I guess which our viewers want to know is it sustainable, or is it just one quarter you're seeing better growth?
No, it's not only one quarter. We had really good order intake in that business already in Q4, and it was broad-based across several different product segments, different geographies, and this has continued in the first quarter. And what I would specifically like to highlight is the fixed network spending, which is all these fiber to the home projects in different parts of the world, including in North America, where we are seeing actually now a better outlook for this year than what we saw a quarter ago.
Yeah, I mean, that's a bit of a worry then, Pekka, because that means that the constrained spending behavior from operators due to the macroeconomic environment and uncertainty is still going to remain, and that provides some weakness then for a little while longer, doesn't it?
Well, that is true for mobile networks, especially for the fixed part of which is then in our network infrastructure business, and to some extent the software business in our cloud and network services businesses. They have seen an uptick in order intake, which is really good. When it comes to mobile networks, we believe that Q1 was the low point of this cycle, and then we are expecting gradual improvement in volumes. But as a whole, we do expect that 2024 will still be a relatively weak year for mobile networks.
Yeah, you've also been, of course, speaking about the loss in that $14 billion contract then with AT&T. I mean, it means that you lose a large part of your presence, particularly in North America. How do you get that back, if you can at all, with regards to your presence in the United States?
Well, when we look at the big picture in mobile networks and 5G especially, in the last 2 years, during 22 and 23, we have increased our market share outside of China from 22% to 29%. And the loss of that particular deal will take the market share down a couple of percentage points, but we will still be significantly higher than we were a couple of years ago. Operator investments are really low in most parts of the world at the moment, and it has to be only a matter of time before they start coming back, because the data traffic in networks continues to grow 20 to 30% of the year, and the reality is that we have only seen early stages in 5G deployment in many parts of the world.
Pekka, I'm interested in technological innovation as well, and what is going to be the catalyst of a renewed spending spree as well. Is it going to be actually a continuation of focus on 5G? Is it going to be because 5G is going to be complemented by AI, or is there something else that actually you're quite excited about?
Well, it's actually pretty simple. Everybody's talking about AI and cloud as being the key two drivers at the moment. There needs to be a third element, which is the network with fundamentally improved capabilities. Without that, we will not be able to reap the benefits from AI and cloud. Applications need AI, AI needs compute power, cloud is the answer. Edge cloud will bring that power close to the end users, and edge cloud will not happen without significant investment in networks. That's how we believe that fundamentally the network market will be a healthy market for several years to come.